Hi, it's James Gerrish from Market Matters and welcome to another Direct from the Desk. It is Tuesday the 23rd of January around midday, and today I want to focus on QBE insurance. Before I get into that, I just want to remind everyone that any advice here is general advice at best. QBE came out this morning with some, I guess, negative news flow around their FY17 performance. It was an update ahead of their results, which their full year results that come out in later in February, towards the end of February. They updated in terms of claims around some hurricanes over in the US, which has obviously had an impact on the business. They also came out and took some write-downs on goodwill of their US operations, their North American operations, to the tune of $700 million. And they also beefed up some of their reserves. Without going into the details of the update from QBE, because I don't really want to focus on that, I will focus on that in the afternoon report today. I want to give you the flavour for what I heard on the conference call, the call with management this morning. Basically, the numbers when they came through didn't look good. There's no sugarcoating in that regard. Listening to the conference call and listening to the analysts questioning the company and the responses provided by the company, it gave me a little bit more of a positive feeling about the stock. I think there's a couple of key takeaways from what I heard this morning. Effectively, Pat Regan, who is the new CEO, before he came on board, the company was doing a number of reviews within different parts of their business. He is combining all of these views into a company-wide review and implementation of the reviews that have been put in place in the past. So, look, his main takeout is that they're going to be simplifying the business. They're going to be looking at their underwriting result, so the actual core result in the underwriting area of the business. So basically writing better business is the key takeout there. The market likes this approach around simplification of QBE. QBE, as we've written about numerous times in the past, is a very complicated beast. And this simplification process that Pat Regan is working through is a clear positive going forward. The other takeout that I got from listening to management on this call was around how conservative their estimates are being moving forward. Effectively, a new CEO has come on board. They're rebasing market expectations low. I think they've been overly conservative in their approach by doing this, and it sets up a lower, I guess, benchmark for 2018 onwards, and it gives them a greater likelihood that they'll achieve their targets. So I think overall it was a less negative result than the market saw initially. We're seeing it on the share price now, and I don't want to obviously react to the share price. The stock opened around the $10 mark, traded down into the high 980s and is now up there at 1038. So the stock does look pretty attractive in terms of price action after the bid up from the session lows. Just in terms of what analysts, how analyst coverage on the stock right now, you can see that the only analyst update so far, there'll be more out tomorrow, is Morgan Stanley. They've got an overweight call on the stock. They did reduce their price target by about 2.5% on the news. 1260 price target, and given the stock's trading around the $10 mark. So look, my main takeouts, again, simplifying the business, doing better business. I think they've rebased their earnings lower, and I think there's a good chance that they'll surprise or start to at least meet and beat earnings expectations going forward. We own QBE. We'll continue to hold QBE going forward. Our view was if we didn't have 7% in the stock at this point in time, we would have been buyers of this stock into this weakness. As always, have a great trading week. I'll speak to you soon. Bye for now.